Hello, I'm Mike Bondy, partner at Collins Barrow, London, Ontario. And today I'm going to talk a little bit about farm succession planning and what's been going on in the industry and some tips and traps relating to what to do and not to do. Right now, one of the biggest barriers to farm succession that we've found is the price of these farms has increased so much in the last 2 years that we're dealing with a lot larger tax problems than we've ever had before with respect to this. So sometimes we get into a lot of issues where there are things that people do which create problems when they don't have the proper type of advice beforehand. A client came to me the other day and they said, I just want to transfer 200 acres or a 100-acre farm to my son. My son works as an electrician and he makes, about $100,000 a year, and because of that, I still just want to get it transferred down to him and just do it. I promptly told him that his son wouldn't get the benefit of the $750,000 family farm capital gains exemption because he's got other income other than a farmer. He's not technically a farmer for tax purposes. So what would happen is if father transferred it and used his capital gains exemption, he would owe $65,000 between minimum tax, alternative minimum tax, and clawback on his old age security. So it was something where the farmer was just going to transfer it and not worry about it, and I said it could have adverse consequences. We ended up basically waiting until father dies and then transferring at that time, but in the meantime transferring it into joint ownership with the son, but showing that it's not intended to be the son's yet. It's fairly complicated stuff. You should really contact your advisors about this. So some of the tips and traps that I want to give you relating to farm succession are as follows. Whenever you gift property, make sure that you gift it at the right time. If you're going to gift property to a child who's getting married, it gets gifted after the date of marriage, not before. The reason is after the date of marriage, you're able to complete a gift document that essentially will exclude the property and any gains on the property or income from the property from being included in the calculation of family property should that son get divorced in the future at any time. It's a real neat little trick, but you just have to be very careful that you do it at the right time. And this happens all the time. You're very much able to do it. So the other thing is, a lot of people talk about marriage contracts and being able to work those. They're very difficult to do. There are other ways to work around. Those problems where you really don't have to worry about it. Use a corporate will to avoid probate. So if you do have a family farm corporation, have a lawyer do a corporate will for you so that you don't have to pay probate fees on all the value of those shares. Avoid putting assets into joint name for probate purposes without proper tax advice as well as legal advice. There are tax ramifications with respect to everything that you're doing. Whenever you get a chance, increase the cost base of a property before transferring it on to the next generation or transferring it to anybody. You have a $750,000 capital gains exemption. You can use it. Watch out for alternative minimum tax that may come into play as you're going along, but just be careful when you're looking at it. You can have a gain of $200,000, for example, and not pay any alternative minimum tax. So every time you transfer, elect. Make sure that that happens. I just had one client come into me and say, my dad transferred me the farm in 2006. His accountant told him he'd have to pay $6,500 in old age security, clawback if he claimed his capital gains exemption at that time. So what happened was she got the property at his cost base, which was $26,000 in total for a 100-acre farm. Farm's worth $2 million today. Basically, he has to pay capital gains tax between $2 million and $26,000. The tax cost is huge as you're going along. So again, watch out for all those sorts of things that are there. Remember that you can buy and sell farm corporations as well as farms on a regular basis. So looking at things like that are very important. The best takeaway on all this is to get the proper advice from accountants and lawyers that know what they're doing in this area and specialize in it. I'm Mike Bondy from Collins Barrow, London, Ontario. Thank you very much.